Hello everyone, I hope that you're doing well. So before you watch the video, just make sure that you're subscribed if you're not. Like the video and just make sure to engage with us in the comments below. And the answers that you covered here, you can be able to find them in the description. So just check the link below and yeah, and we'll take it from there. So in this session, we're looking at question two of the November 2024 paper one for accounting. And yeah, and we trying our best to, make sure that you understand. So I got my answer book here. As you can see, it's just, I read some of the things that are already in the answer book. And then this is the question. And then this is the answer book that I'll also be referring to in case that I do need to, but otherwise, we'll see. We'll see as the thing goes. So let me just go to the start of the question. So in this question, we're covering the cash flow statement as well as financial indicators. And it says that the information relates to ABUS Limited for the financial year ended 29th of February 2024. And it says that prepare the retained income note for the year ended 29 February 2024. So let's get into the retained income then. So the retained income, we're basically given this information and we're trying to find basically that balance at the end. And then, there's this information that is right in between here. And yeah, we want to see how we basically sort that out. So when we do a retained income note, we start with the balance at the beginning of the year. And then we add our net profit after tax. And then the next thing that you're going to put is the repurchase of shares. Now, remember that when we do the repurchase of shares, we are essentially just looking at the amount in excess of the average issue price. So if you have an average issue price of 5 Rand and the shares were repurchased for 6 Rand, in the retained earnings, we just take the 6 Rand minus the 5 Rand, which is 1 Rand. And so that will be the repurchase of shares that goes into our retained earnings. And then the average issue price would go into our note, which is share capital, but we're not doing share capital in this case, so it's not something that we're going to worry ourselves about. And then under our dividends, just remember that we got our interim dividend, and then we also got our final dividend, and you can call it different names, declared dividend, whatever the case is. But yeah, so interim, final, those are the terms that I'm comfortable with. And now let's get into the nitty-gritty of the stuff and see if we can be able to solve the things that we need to put in here. So let's start with the net profit after tax to see if we can find the information that we need to get. So firstly, we're given the income tax, but the net profit after tax, we are not given. And so if maybe we can get the tax rate, we can be able to work that out. Let's continue. Then we have information about share capital that doesn't give us much as it relates to maybe the profit. Dividends, not so much as well, but if you look at the other information, I think the closest information is dividends because you're looking at dividends as well as the dividend payout ratio. So the dividend payout is basically your dividends over your net profit after tax. So let's see. So here we basically have an interim dividend given, which is 416,000, which has been paid. And then we have the total dividends declared and paid in the current year, 744, and that's basically the total that we got in our note there. And then we have the dividend payout ratio, or I said the dividend payout rate for the year amounted to 40% after all transactions were correctly recorded. So in other words, the payout rate in this case, in other words, of our profits that we made as a business, we paid out 40% towards dividends. That's basically what that information is trying to tell you. And so it means that if you have your profit, so you have your profit at 100% and then paid to dividends. So paid to dividends, paid and declared to dividends, by the way, is basically 40%, which means that capped is 60%. Okay, cool. Now in this case, what are we looking for? We're looking for the profit. And by the way, to be clear, this is the profit after tax. So let's work that out then. So basically we have the dividend paid out and paid and declared. Let's just add that, paid and declared, because it's interim and final. So paid and declared is 40. So let's look at the information that will help us to work this out. It says total dividends paid and declared were 744,860. So we can use 744,860 to basically work out what is the profit, because we want to get 100% of the profit. And so we would say, well, 744, 860, and then we would multiply it by 100, and then we'll divide by 40. So that gives us our net profit. All right, the next thing that we need to then look at is the repurchase of shares. So the repurchase of shares, we would look at the share capital information. So it says on 1 March 2023, there was 1.2 million in issue. And then it says 400,000 shares were issued at 10 Rand per share. So this is not a buyback. But then on the 30th of November, 34,000 shares were repurchased at 190 per share. So if you have 34,000, or it says at 190 per share, but it says 190 above the average issue price. So in other words, if the average issue price is 5 Rand, so these shares would have been repurchased at 6.90. So this is just what we need actually now in order to be able to work out the repurchase for the purposes of the retained income note. But obviously, if we were doing the ordinary share capital note, then we would need to find out what was the average issue price. But for the purposes of this, we just need the amount above the average issue price. So that's going to be 1.9, and then you're going to multiply by 34,000. So here's the calculation. So 1.9 multiplied by 34,000 shares, and that's basically the repurchase. And so that repurchase, let's remember that it's a negative amount, and so that's going to be 64,600. And then after that, we're going to look at our dividends. Now we've been given a total already, and then let's look at maybe some other information. So there is a final dividend. So this final dividend, this is from last year, and you can see that it says that it was paid in the current year. So again, that relates to the previous year. So this is not a current year dividend, but for the current year, we declared a dividend during the year and paid it. So that's 416,000, and then the other dividend remains declared. So if you look at the total dividends of the current year, well, 416,000 has been paid, and therefore the difference would be what is still declared, or what we call the final dividend. So what are we going to do there? So we're just going to come in here and put 416,000, and then we're basically then after that going to work out the difference between 744,860 and 416,000, and that will be our final dividend. Therefore, we got our final dividend as 328,860, and therefore we can be able to work out our balance at the end of the year. Our balance at the end of the year is going to be the balance at the beginning plus the net profit after tax minus the repurchase of shares, and then also minus the ordinary share dividends. And so that will give us the retained income amounting to 1,626,410. Okay, cool. Then let's look at the next question and see what is required from this question here. So the next question is saying that we need to complete the cash flow statement for the year ended 29 February 2024. So just, as a heads up, just make sure that you can see that here. You can see that these ones have been left in gray. Now these ones left in gray means that we don't have to fill in information there, but we're going to fill information on the other ones that are in white, and then we'll see what is possible to complete. But in all these white parts, I expect that we should have amounts, but in the gray amounts, we're just going to leave it as is. All right, and you can see that we already given the net change in cash and cash equivalents. So in other words, then we don't need the totals of financing activities, the investing activities, as well as the operating activities. So let's start with the operating activities. Now, operating activities, there are two things to expect here. So we basically would have tax paid as well as dividends paid. So we're going to start with the tax paid, right? Okay, so I'm just going to skip the first two lines, by the way, because it's not important to me. But I'm just going to go straight to tax paid. I'm not going to rewrite that thing over there. So now with tax paid, the way we need to think about the tax paid is, well, how much total has been paid in tax, and now we need to consider the balance that we must have owed at the beginning or was owed by SARS at the beginning, and analyze to see if that would be an outflow or inflow, and then look at the balance at the end of the year, decide if it's an inflow or outflow. So let's start then with the balance at the beginning of the period relating to SARS income tax. So at the beginning of the period, you can see that the business had a credit balance. So in other words, the business at the beginning of the current year owed SARS 44,675. So whatever amount you owe SARS at the end of the previous year, you would pay it in the current year. Before you pay any other taxes, you pay that balance. So then the first inflow that we're going to talk about is the 44,675. So I'm going to put this as a minus because it's paid out. So I'm going to say 44,675. The second outflow that we're going to deal with is basically the income tax that is given in the income statement. Now, this income tax, we basically, the way we want to look at it is basically like we can look at it, all of it as an outflow, and then after that, we look at the end of the year if we still need to make an additional payment or if we have paid above our taxes. So let's see here, you can see that this is 462,000. So that's going to be minus 462,000. And then we need to look at the balance of SARS income tax at the end. Now, the balance of SARS income tax for the end shows that SARS owes to the business 66,650, and the way in which SARS would owe us that money would mean it would be because we would have overpaid to SARS, right? We would have overpaid by 66,650, so we paid 66,650 above the 462,000, and so in that case, we'd also subtract that amount because that would also be another payment that went to SARS. So this is 66,650. And you can see that all of these amounts were essentially outflows. So I put them all as negative. And so that would work out to 573,325. All right. Cool. And then the next thing that you're going to be looking at is dividends paid. So now to think about our dividends that were paid, well, what we basically would need to do then in that case would need to look at, well, the dividends that were needed to be paid. So you can see here that, for example, when we're speaking about dividends, that these dividends were paid during the year, but they related to the previous year. So if you can be able to figure out what that dividend was, because that would be the first amount you paid, then the second amount you paid would be the interim dividend. So if you can add those two, then we got our dividends paid. So let me go to the information to see what was shareholders for dividends at the beginning of the year, if it was given. So if you look at the information here, shareholders for dividends was not given. So this leaves us in the dark in terms of, well, how much was actually paid out. But then the other thing they gave us is that this is 17 cents per share. So if you can figure out how many shares were in issue on that date, you can basically use 17 cents to multiply. And if you look at the beginning of the year, we started off with 1.2 million shares. So if you start off with those shares, then you must have closed off with those shares. So in this case, then for the first part of this calculation, we're going to say 17 cents multiplied by 1.2 million. So this would be the first payment. So it's going to be 17 cents. So I'm going to say 0.17 multiplied by 1.2 million, so 1 million. And then after that, in addition, there's also another payment that was made, and that payment was 416,000. So I'm also going to put it as a negative. And then the last dividend, which we did calculate, for example, here, this dividend is final. So it's, in other words, it's currently sitting as shareholders for dividends, meaning that it's not been paid yet. And so we cannot include it in our calculation as it hasn't been paid as yet. And so there would be our dividends paid. And then after that, we're going to move. And then remember that I did say here that if you look at the investing activities, it's just basically gray, so there's nothing to fill in there. But then we got our financing activities. So now, when it comes to our financing activities, we have to look at a different thing. So firstly, we think about there's a few things that can be there, right? So firstly, we can think about the proceeds from issue of shares because we look at basically two things for financing activities. We look at shares and then we look at long-term liabilities. So in other words, non-current liabilities, which would be the loan. When it comes to shares, we basically look for two things. We look for shares issued, but also look for the shares that were repurchased. So now, starting with the shares that were issued, you can see that there was an issue of 400,000 shares at 10 Rand per share on 30th of June 2023. So that would then work out to this. So cash flows from financing activities. So you're going to start with proceeds from issue of shares, which would work out to 400,000 multiplied by 10. And so that is going to give us 4 million. And then the next thing is going to be the repurchase of shares. Now, when it comes to repurchase of shares, we would first take the amount that is in the repurchase of shares in the note, retained income note. So that is 64,600, and again this is a minus. And then in addition to that amount, we then would need to work out the average issue price multiplied by these 34,000 shares. So then in this case, we want to work out what is the average issue price of these shares, because basically when shares are repurchased, we consider basically the total amount, which is the amount above issue price as well as the issue price. If you add them together, then it gives us the total amount that relates to the repurchase of shares that was actually paid. So then we want to figure out how much was actually paid, because we know that 1.9 was basically the amount above the average issue price, but what was paid for the average issue price? So we need to figure that out. So to work out now the average issue price, we have to look at some of the information we can get from the previous year. So you can see here that in the previous year, we had ordinary share capital of 8,160,000 relating to how many shares? Well, it would relate to the shares that were in issue on the last day of the year, i.e. first day of the current financial year. So that is 1.2 million. So, and then after that, we would add the amount generated this year, which was 4 million, and then also divide by the number of shares, and then we'll get an average. So if we look at this, then we would say if we look at our numerator, let's look at our numerator first and see how it's going to look like. So our numerator is going to look like this. So we have to think about, well, at the beginning of the year, well, we had 8,160,000, all right? Yes. And then in the current year, we then raised an additional 4 million. So this is the rent value that is above. And then below, we would then divide by the number of shares. So let's put this information here. So in this case, and remember that we're working here, we're working out the average issue price. So the average issue price is basically the total amount raised from shares divided by the number of shares. So from that 8,160,000, if we remember well, there was 1,200,000 shares. And then additionally, in the current year, we issued 4 million shares. And that's going to tell us how much on average has this business been issuing the shares for. Okay, so let's try then to apply this. We are then going to here. We are then going to divide by these shares here. So basically 1,600,000 if you add all of these things up, but I don't need to add them up. I'll just do it here, and then we'll see what we get. So the average issue price is 7.6, and so in our calculation for average issue price, then we then would put 7.6. So that is, so in other words, these shares were repurchased for 7.6 plus 1.9, because 7.6 is the average issue price, and then 1.9 is they were sold 1.9 above the average issue price. So just make sure that you do understand the comprehension over there. It's nothing complicated. And because this was a repurchase, it's basically going to decrease the amount of money that we had. And then the last thing to consider is the loan, whether the loan was repaid or maybe the business took an additional loan. So let's look at the information relating to the loans. So as you can see here, we're given the loan at the end of the year, but we're not given at the beginning of the year. But we have information here. So it says loan Smiley Bank. So we have monthly repayments of 97,120, and they include interest, and we're paid, but interest capitalized is 685,440. So here, what we want is basically the amount paid towards the loan. So there's a payment of loan here, but we want to take out the amount that was capitalized as interest. So we're going to have loan repaid, and the way we're going to calculate it, we're going to say, well, firstly, we're going to say, well, this loan is, we paid back 97,120 every month, and then multiply that by 12. So those were the number of payments that we made. And then from that total, we then want to exclude the interest that was capitalized. And so to exclude that interest that was capitalized, we then say 685, 440. Now, forget the logic of it. You can calculate this thing outside, but my intention here is just to make sure that the amount comes out is negative. And I'll put it in my calculator, and you will see how it's going to happen. So there is the calculation for the loan that has been repaid. So we repaid 97 times 12, and then part of that was 440, which was payment towards interest. So if we really work it out, the amount paid towards the capital balance of the loan is 480,000. Now, in this case, we would have enough to work out the cash flow from financing activities, but we don't have to. You can see that this is a blank thing here. So the next thing to fill in into this is the cash and cash equivalents at the beginning of the year. So cash and cash equivalents at the beginning of the year. Well, let's look at our balances that we have at the beginning of the year as it relates to cash and cash equivalents. So at the beginning of the year, we had cash and cash equivalents amounting to 36,000, but then we have 142,680 in the bank overdraft. So basically then in this case, we'd say, well, we have a positive amount for cash and cash equivalents, which is 36,000. And then that positive amount of 36,000 is then subtracted by 142,680, which is the bank overdraft. And so this amount goes towards the bank overdraft. And therefore, that gives us our net cash and cash equivalents at the beginning of the year, which is 106, 1880. And so the net change, which is 296,460, it was given in this thing, but also it was also given in the extra information here. And it says it's an inflow. So then that inflow minus the cash and cash equivalents at the beginning of the year. Obviously, if it was positive, it would plus, but now it's negative, and it would give us our cash and cash equivalents at the end of the year, which basically amount to 189,780. So that's how we would do the net change in cash and cash equivalents. And then the next thing that we're going to be looking at in this question are the few ratios that we have been asked. So the first ratio is percentage of operating profit, so of operating expenses on sales. So fairly simple. The operating expenses is 1,360, 950, and the sales amount to 8,240, 600. So 1,360, 950. So operating profit on sales. Let me go down. So we have 1,360, 950. 1,360, 950. Then divide by the sales, which is 8,240,600. 600. So divide by 8,240,600, 600, and then you multiply by 100. I don't need to multiply on Excel. I can just turn the whole thing into a percentage. So that's how it works out. And so as a percentage, that's basically 16.52%. Obviously, I've rounded off to 2 decimal places. You should check at the beginning of the paper how you should round. But yeah. Then the next is the stock turnover rate. So with the stock turnover rate, it's basically your cost of sales divided by the average stock, and then you will get what you're looking for. So cost of sales, what is cost of sales? Well, cost of sales is 5,060,000. So we're going to say 5,060,000, then divided by average stock. Now, by average stock, we mean stock at the beginning plus stock at the end, and then you multiply that by half. So you divide by 2. So to say, all right, so let's do it. So we're going to say stock at the beginning. What is the stock at the beginning? Let's look at the information. 193,000 plus 174,000. So 193,000 plus 174,000. Now we want to basically multiply this by 0.5 or divide it by 2, but obviously here I'm doing the calculation here, so I'll multiply by 0.5, and therefore that would give us a stock turnover rate of 27.57 times. So this is times. So that means that we stock and replenish about 28 times per year. And then interim dividend per share. So the interim dividend per share, we have to look at our interim dividend in the current year, 416,000. And then we need to figure out, well, how many shares were we paying dividends to at the time we paid the dividend? Well, the interim dividend was paid when? On 1 September 2023. And how many shares were in issue on 1 September 2023? Well, we had 1.2 million at 1 March 2023. Then 30th of June, we added 400,000. And then this repurchase occurred before 1 September. So we want to subtract that 34,000. So then that means that we basically had 1.6 million shares, which is 1.2 million plus 400,000. So then dividends interim dividend per share would work out to per share, or if you want to then present it somehow, you could have multiplied that by 100 so that you can present it as 26 cents per share or 0.26 per share. That would be when you do it in rands or when you do it in cents. So 26 cents per share, and so that would be how we would answer that question, and there is no more anything left, so I think we'll leave it there, and I shall see you in the next video. So cheers for now. Make sure that if you have any questions, you put them in the comment section. Otherwise, catch you on the next one. Cheers.